Hey, welcome back to Two Super Guys Trade Stocks. I am Dylan,
And I'm Vinny.
and we're going to take a look at how some people have been calling the American debt ceiling more of a Ponzi scheme and how it's going to affect our stocks. We'll get into it.
Two Stupid Guys Trade Stocks.
All right. I was going to put like Bernie Madoff on here, but then I was like,
Yeah.
nah. That
Well,
probably,
you know what I really like about this picture is that Chairman Powell has his fingers up in a
yeah.
pyramid because it's the Illuminati that really are making this debt go ceiling crisis, right?
Is it? Is it the Illuminati? Nice. Oh, I should say, I shouldn't tell you this. I took down the inflation video because I said that you could withhold less money during the four quarters for taxes and put it into a high yield savings account. So you can get penalized for that. There's a way to do it, but it's super dependent on your income because you'll get penalized, but you can get penalized less than you would make, so that it's still worth it. But it's entirely dependent on how much you make, if you get bonuses, that kind of stuff. So just don't do it without talking to an official tax guy. Don't take,
Exactly.
I don't know what I'm doing.
Ask your CPA.
Ask your CPA. Don't take my word for it. All right. So why is this a Ponzi scheme? All right. So we're going to get into why this debt ceiling is more just a 24-hour news cycle story because they need something to talk about and it really doesn't matter. But basically, we're hit the 31.4 trillion on January 19th. Treasury Secretary Janet Yellen was like, hey, we need to increase it or suspend it. Peter Schiff, he's a famed investor, market commentator. He was literally saying how the official admission that the U.S. is running the world's largest Ponzi scheme. Okay, why is it a Ponzi scheme? All right.
All right, I'd love to hear this. Yep.
Yeah. So basically, the only way to avoid a default on the national debt is to raise the debt ceiling, so the government can borrow from new lenders to repay existing lenders. How does that sound so far?
I mean, it makes sense. I mean, the debt ceiling is an artificial construct, anyways. But the other
Right.
alternative would be to actually, like, I don't know, like pay your bills like a normal household does without running up more
Hmm.
debt. But no,
Weird. So then he
yeah.
says, why do people willingly participate? It's because they don't realize it is a Ponzi scheme. They think they're going to get paid back. When they realize they're going to get paid in monopoly money, that's not going to lend in any way serious help. In fact, they're not going to want to hold on to these treasuries. The only buyer is going to be the Federal Reserve, and that's when the printing press is going into overdrive and the dollar will fall through the floor.
That's what the UK did a few months back. Don't forget that.
Yeah, and that did not work out well.
No.
Now, here's one. I think that he's absolutely correct. This is a Ponzi scheme. I think you can argue most banks are.
You're basically arguing against fiat currency at this point, right?
Yeah.
I understand.
Like Chase, Wells Fargo. If we were to do what they did, we are in prison so fast. Like it's pretty wild. Um, Here's why I don't think any of this matters, and it's for headlines. Okay? Since 1960, the limit has been lifted 78 times, 30 from Democrats, 49 from Republicans, and it's just like a bargaining chip. Like as of right
Hmm.
now, Republicans are trying to push through policies, which I don't care if you're Democrat or Republican, it's all crap. Um, they're trying to push through policies and they need the vote, so they're going to withhold their vote as to the threat that they may not want the debt ceiling to be raised. They're going to raise it. It's going to happen. Okay? It's already happened 78 times just to get votes. And here's why this is crap. Okay? The U.S. has never defaulted on its debt. There's a big reason. Let me move our faces here. All right, there's a big reason why the dollar being the world's strongest currency. Okay? We have the full faith and credit of the U.S. government. That's like a thing that everyone says. World credit markets depend on this relationship as their baseline, and that affects markets in commodities, stocks, bonds, everything. The full faith and credit of the U.S. is foundational to the economic well-being of this country, its trading partners, and the world at large. Okay?
Okay.
If we didn't have a perfect credit rating, we could expect to pay more and pay much more to borrow. Literally Armageddon is what this is meaning. Not quite,
Okay.
but so bad. Here's where we're at.
Yeah, I know it's a scary number, and this is a website that is worth going to every once in a while just to see how large this national debt is and how fast it increases. And just don't forget, you're talking about $246,000 per taxpayer. It's a hefty number
That's real? $246,000 per taxpayer?
per taxpayer. Yeah, if you actually look at the U.S. workforce, it's 159 million. So only about half of us actually have jobs. Basically, it's just people.
That's sustainable. Okay. I didn't know that.
Yeah, that's scary. That we do a whole video about the dynamics of the workforce and how it changed since the pandemic, and it's pretty fascinating all in itself. But that's not the point of this video.
Jeez. So my first thought with this debt ceiling nonsense, yes, it is scary, but they're not gonna let Armageddon or any of that happen. They're gonna do what they did the other 78 times. Okay? After you've been through these every 4 years, you start to not take them seriously anymore. So this green arrow, and red arrow, those are the last 3 times this whole thing came up. Some of these are suspensions. These were all 21. 2019, there was 2 more, same thing. It looks the exact same.
Yeah.
I thought we would have had like a dip in the market, but not really. I mean, there's like one, but it recovered immediately after. So this is actually not bad news. And then, I know, you would think it would, right?
I would increase a little bit of uncertainty, perhaps. So, like, stock market doesn't like uncertainty, so that's why I thought it would have at least more volatility in the period thereafter. Leading up to it.
We're in an insanely volatile year as it is. So,
Yeah.
I also then looked at gold. I was trying to see, okay, well, people are like, well, money is just paper. Gold's going to go higher. Same thing. Didn't really matter. It was like 50-50. There's really not a big play here. However, if you're logically thinking the market's going to go short because of this, I probably would not initiate a short. It doesn't seem like a great idea.
Based on this news alone, or in conjunction with like the market technicals of us being pretty close to that 200 moving average.
We're at it again.
That's
to the dime. Yeah.
Yeah.
Different story. But let us know how you guys feel. Have a good one.
Yeah. Next one.